along with Jordan Maisel and Dallas Ramsden, have created this documentary for our Operations Management class at UW-Whitewater with Professor Suprasit Jagru-Patharan. He allowed us to create a documentary about any topic covered in class. Because all three of us are accounting majors, we chose to do the topic of triple bottom line accounting. Now, I know what you're all thinking, but when did this class ever cover triple bottom line accounting? Well, if you were paying attention in class, you would know that this topic was covered in chapters 1 and 2. Fortunately, we will recap the information found in this textbook in our documentary. You're welcome. After this recap, we will have an exclusive interview with UW-Whitewater accounting professor, Dr. Robert Gruber. He currently teaches an environmental reporting class on campus, and his insights should be valuable. After this interview, we will conclude the documentary with some final remarks. On behalf of Dallas, Jordan, and myself, enjoy.
My name is Jordan Maisel, and I'm going to quickly recap the information that was found about our topic in our textbook. So a recent trend among businesses is to embrace an idea called sustainability. On page 17 of our textbook, sustainability is defined as the ability to maintain balance in a system. This newfound trend of businesses embracing sustainability manifests itself in something called triple bottom line accounting. Now, triple bottom line accounting is when firms in their financial statements report not only its status in an economic sense, but also its status in a social sense and in an environmental sense as well. Let me quickly touch on what each of these dimensions refer to. The first dimension of triple bottom line accounting is the economic dimension. And this deals with whether or not a firm makes a profit. Additionally, this talks about whether a firm provides a lasting economic benefit to society. The second dimension of triple bottom line accounting is the social dimension. This dimension deals with whether businesses have fair and beneficial business practices. To succeed in this dimension, firms should seek to pay their employees fair wages and give their employees safe and clean working conditions. Additionally, firms should look at ways to give back to their community. The final dimension of triple bottom line accounting is the environmental dimension. This deals with two things. Number one, whether a firm tries to limit its use of non-renewable resources, and two, whether a firm seeks to limit the amount of pollution it produces.
Okay, Dr. Gruber. So, from your experience as an accounting professor here, how was triple bottom line accounting able to sort of come about?
Well, it's come about at Whitewater, if you're asking about the course that we teach here. Obviously, this is an important topic. I do believe the management has talked for years about sustainability, but this concept of triple bottom line is an accounting concept in parallel with sustainability. And the course here, is that what you're wondering about?
Yes.
The course here actually came about in that I developed it about 5 years ago for accounting majors, although we opened it up to non-majors as well. And the reason that we started the course here, and we call it Sustainability and Environmental Reporting is the name of the course, to emphasize not so much the triple bottom line, but the environmental side of it. And that's very important to understand it. We as accountants understand the economic side. We as accountants are very naive and infants in the environmental side. So we titled it that way. And the idea is to get accounting majors, I don't want to say socially aware, but certainly up to speed. In Europe, this topic has been around for 2 decades. They're at least 20 years ahead of us. So basically, the course here at Whitewater was to get us up to speed. We were one of 5 universities in the United States that had this course 5 years ago. It's now there are literally 100. So it's definitely catching on. Definitely catching on. So we might be ahead of the game a little bit here at Whitewater, but certainly others are joining in the triple bottom line philosophy, at least from the teaching standpoint.
Okay, so we have 3 dimensions of triple bottom line accounting, and we're wondering which one you think poses the biggest challenge for companies. We have the social dimension, the economic dimension, and then the environmental dimension.
Exactly, and those are the 3, and that's where the triple bottom line comes from. The idea is to bring each one of those into a single annual report, so that they all get reported at the same time that the shareholders get their annual report. That's the idea behind triple bottom line. One of the challenges with, and I may be wandering a little bit here, and I'm sorry, but one of the challenges of triple bottom line is it puts the economic, social, and the environmental, if you will, 3 columns, and it treats them as somewhat, at least on that report, as equals. And instead of synchronizing the 3 of them, it puts some separate columns. Does that make sense?
Yeah.
Whereas one report blends it in as one column, but includes the social and economic and environmental. That's the difference between the 2. You asked about which one is the most challenging for accountants. Is that what you were asking?
For firms who use triple bottom line accounting, which is the biggest challenge?
The biggest challenge is the environmental side. The economic side we got down. Okay, we've been doing the economic side for a century, if not more. So we've got that side down. It's economic side is measured in money. The social side, managers obviously would be complete idiots if they didn't manage the social side. So they know the impacts of the social side. They know the costs of the social side. That side they've got down pretty good. We've got down pretty good. But the environmental side is the Wild West. It's wide open. What to measure, how to measure it. So much of the environmental costs are in the future, where you have to estimate and make assumptions, and whereas the other costs are a little bit more in the present, if that makes sense. So in my opinion, this is my opinion, the largest challenge is the environmental side. And I don't even think it's close. I think it's by far the most challenging. Yeah.
Okay. Could you quickly explain how you think triple bottom line accounting specifically impacts the environment?
Well, that's a great question, and again, let me give you a little bit of my opinion. In my opinion, and you'll see this written, and it's not just me, but I'm stealing it from others, what gets measured gets managed, if that makes sense to you. If you measure something, if you take the time to come up with impacts and a cost of something, it becomes important, and people will manage it. I don't think it's quite that simple. I think it's what gets managed, what gets measured is what's important. So the fact that you're now starting to see environmental impacts and costs quantified and included in annual reports tells you that it's becoming important. And so whether it makes money or not, it's important. So I think that's the biggest impact, is once you start reporting these things, people expect you to manage them appropriately.
Next up we have, if you want to hold this up for the camera real quick, it's a book by Andrew Savitt and Carl Weber. It's called The Triple Bottom Line.
Right.
And what Savitz and Weber believe is that for most companies, sustainability enhances profitability. And what I'm wondering is if you agree or disagree with this statement.
First of all, it's a very easy and quick read. It's not technical. It's got a couple of nice cases that the authors discuss. So while people might think of it as an accounting book written by an accountant, he was a partner at one of the big four accounting firms. It's a very quick read, and it's a very easy read. I do recommend it to any major that's interested in triple bottom line. As far as I think that it's been shown that makes sense, that if you're environmentally aware that it will translate into higher profits, but it's not always immediate in the short term. And as you know, accounting reports tend to focus on the today or the immediate past year. So a lot of the environmental benefits may not occur till the future. And so I do believe that managing the environment appropriately is cost effective, and you can make money, if you will. Sorry to put it that way. But it may not be that direct relationship between costs today and benefits today. Does that kind of make sense?
Yeah.
And it's sort of tough to see that relationship, and you kind of have to approve that relationship. But in my opinion, it's definitely there, and you do see some immediate impacts. Saving paper, for example. Can I give you an example? Disney, at one of their parks, were printing reports on full sheets of paper when they only used half for the actual report. Somebody recommended going to half sheets of paper on these particular reports, and it was only one area of their operations. They saved $180,000 a year just by going to half sheets of paper. So there they are, being environmentally aware, but they also made money. So it may not be that easy, but sometimes it is. Often it's not. Often it's not.
So in their book, Savitz and Weber urge businesses to find their sustainability sweet spot, which they define as the spot where a firm's profit-motivated business activities simultaneously help the firm to pursue the common good. So when firms find this sweet spot, their business activities will simultaneously benefit all stakeholders, including shareholders, employees, customers, and their local communities. So do you believe that it's easy for companies to find their sustainability sweet spot?
No, that's the challenge. I think as a matter of fact, I think it's very difficult, and there's where I think management needs to come into play, not accounting, but management. We can report what they want us to report, and but they need to find that sweet spot, whatever that is. We'll report it. They've got to find it, and I don't think it's easy. I think it's a great challenge. If I could, I'll draw a picture, and then because not many people understand what the sweet spot is. If we take, and you're going to hold this up later.
That's right.
Yep. We have these three triple bottom, these three competing parts to the problem. And I'm going to change your verbiage a little bit, because you said the one is economic, the second is environmental, and the third leg, if you will, is social.
That's right.
Another way of saying that, which was actually started in the first evidence of this was in 1960 or 1987, it was referred to as the 3 Ps of profit, planet, and people. Same thing, just different words, different concepts. But you have these 3 things, if you will. The sweet spot is where all 3 of them interact. And I know you understand Venn diagrams because you've already been through that math class. But you've got these three different spheres, if you will, that are competing. And so the sweet spot, I think, is the combination of the three. It changes sizes as these different spheres compete for scarce resources within a firm. So that sweet spot is constantly changing. And I think that's the challenge, is one is finding it. The second thing is to be aware that it's constantly changing. And that's the sweet spot. What most people call the sweet spot is, I'm sorry, let me back up a little bit, is sustainability is that sweet spot. And I think sometimes people refer to sustainability as the different pieces. No, sustainability is all three of them working in conjunction with one another. So I don't know if that makes sense, but I think it's extremely difficult to manage that sweet spot. And my hat's off to the management majors that do that. But just to make this clear, we're accountants. We report things that happen. We try to organize things that are going to happen, but it's the management, you know, that's got to find that speed. We don't do it. They've got to do it.
Okay, so we're gonna touch base with the Triple Bottom Line book one last time.
Mm-hmm.
So the authors, Savitz and Weber, argue that embracing sustainability will help managers to do three things. One, protect their business. Two, run their business.
Yep.
And then finally, to grow their business.
Absolutely.
What thoughts do you have about this?
Pardon me?
What thoughts do you have about this?
I agree 100%. Yeah, and that kind of gets to what we're talking about here. Is this is sustainability, and what they're basically talking about, and what they've done is they've described the three legs differently. You know, to protect, to grow, and to maintain. And I absolutely agree in 100% with that statement and that philosophy. You've summarized a good portion of the book there. If you understand that, then you certainly would find the book an easy read. So very well done.
And we're certainly going to recommend it to our viewers after this interview.
Absolutely.
Mm-hmm.
So are there any companies right now that are widely known to embrace triple bottom line accounting?
Yes, yeah, and I'm glad you asked, because I think in order to understand it, you need to look at what it looks like in the real world. You know, we can talk about it academically, but unless you actually see somebody doing it and doing it well, it's not going to make sense. And my pinnacle example is Cascade Engineering. They're in Michigan. They've been doing triple bottom line reporting. They're easy to find with a simple web search. I use them in my class as an example of a premier triple bottom line example. And I would encourage you, and I would encourage the readers to go and just find them on the web, and you will know. You know what I mean? It's one thing for me to lecture it, it's another thing to see it. And they've won awards, they are outstanding, they are simply outstanding. And that's Cascade Engineering, and they're located just a little bit east of us.
I see. So what are some common criticisms of triple bottom line accounting?
The two criticisms are, well, there's a couple. One is obviously measuring social and environmental costs and impacts is difficult. There is no gap with it, no generally accepted accounting principles. So the methodology and the metrics are not well defined. You can do it one way, you can do it another way, a third company can do it another way. There's, you know what I mean? There's no standards. And that doesn't mean that there's loose standards. That just means that everybody's sort of making up their own standards for their individual companies or individual industries. So that's one criticism. The other criticism is when you put the three of them together, the economics will always be the dominant sister because it's been around the longest. So if you put the three of them together, it's always going to look the more credible, and the social, environmental will look less. Does that make sense? Because they're the new kids on the block. They don't necessarily have the same standards and metrics and traditions that economics. So the criticism of triple bottom line is when you put the three of them as three columns, you know which one is the boss, and you know which two are second fiddle. And so the criticism is, instead of having them separate, fold them together into one report or one measure. So those are the two criticisms: difficult to measure, and putting them together makes it look like the second fiddle.
So looking to the future a little bit, we discussed one report. Do you think that is going to be the evolution of triple bottom line?
That's a good question. It's not being embraced widely. There isn't one report institute, and again, a simple Google search will find it. I'm wavering a little bit because I'm not quite sure if that is the next step. What I think the next step might be is something like triple bottom, but it might be three separate reports put out at the same time. I think what may be coming, more than one report, and I don't know if this is something you thought about, is at some point the auditing profession needs to come in and have an independent audit opinion on the social and environmental reports. That's going to be really, really tough, but in order to lend credibility to those reports, I think they need to be audited. And I think that is probably the next evolution in this particular area, is the standardization of these reports enough so they can be audited.
Okay, well, Dr. Gruber, that is all we had with him about triple bottom line accounting. And Dr. Gruber, I want to thank you very much for your time.
Thank you. I appreciate
Thank
it.
you.
Okay, so this concludes our documentary on triple bottom line accounting. On behalf of James, Jordan, and myself, we appreciate your interest in watching our documentary. We hope you understand, first of all, what triple bottom line accounting is, and also how it impacts businesses and society. Thank you.